Thank you. So hi everyone. My name is Shaun and I'm the Global Head of E-commerce for LeMieux, which is the leading equestrian brand in the UK. Definitely the market leader here and very rapidly becoming a global leader in our industry. And today I'm going to talk you through who we are and what we do, the situation when I joined the company and some of the challenges that we had to overcome to get to this point, what we needed to do to continue scaling once we understood that we had a problem, how we then transitioned to a full funnel approach along with the results that we've seen from doing this, and then finally what you should take away from this presentation. In terms of who we are and what we do, this is us. This is LeMieux. This is what we do. We make and sell everything that a passionate equestrian might want or need to fit their lifestyle, but our main bread and butter is technically excellent equestrian equipment and rider wear that also looks great. And we sell that to everything from a casual rider who just wants to look and feel good while they're out in a hack, through to more serious riders competing at amateur level, and then all the way through to elite level professional riders competing at world and Olympic level. And I'm going to talk you through our journey to implementing a full funnel approach, starting with some of the challenges that we had to overcome to get to this point. First of which, and probably the most difficult challenge from my point of view, is this is the company's revenue in the 3 years prior to me joining. This is the growth, and this is the media budget that it was achieved with. Over the 3 years, the company grew 150% without spending a penny, which I felt might be a bit of a challenge for me to replicate. So I dived into the numbers to see what was actually driving this. And in financial year 2021, the company had an amazing year thanks to a big growth in new customers, but it was entirely driven by the pandemic, driving people online. And by the second year, that pandemic-driven new customer growth had completely started to tail off. So coming back to the revenue growth, all the revenue growth in these years was driven by pandemic-related customer habit changes. And all the growth in the following year, which was starting to tail off, was driven by those newly acquired customers repeating. None of that was sustainable. I knew it couldn't be repeated. So the first challenge I had to overcome was landing this argument. I had to convince highly successful entrepreneurs who'd had over a decade of amazing success that their recent direct-to-consumer success was largely fortuitous and couldn't be repeated without spending loads of money. The second challenge I had was that I didn't know anything about equestrian equipment or horses in general, which meant that there weren't going to be any big gains from like improvements in UX or the marketing story or anything like that because I didn't know enough about the product in order to achieve that. And then the third challenge was the sales mix. The business was 3/4 wholesale at the time, and the brand was really hot, so I knew that I could grow online with some budget, but there was a serious risk that all I would do is this. I would just gobble up wholesale market share. What I really needed to do was increase the size of the pie for everybody by producing genuine incremental revenue gains for the brand as a whole. So those were the challenges we had to overcome, but at least we did know what was the main problem we had to resolve. The company had grown the previous year thanks to a big bump in existing customers and a very small growth in new customers. But this, which did lead to an overall revenue growth of 33%, which if you were looking at in isolation, you would think everything's great, there's nothing to worry about. But the only reason that we had this existing customer growth here is because we had the pandemic-driven new customer acquisition growth the year before. This wasn't going to happen the following year. So unless we started acquiring a lot more customers very, very quickly, we were going to have a problem. And as a private equity-backed business, growth is mandatory, as many of you will know. So we did the only thing that we had the time and the capacity to do, which is we focused on feed-driven bottom-of-funnel marketing efforts like Performance Max, which we scaled aggressively from 0 to 100K a month in just a few months, which doesn't sound like a huge figure now, but at the time, to what was then a fairly small business that had never spent any money on marketing, that was quite a big, scary number. But it worked, at least initially. We started in our Q2, and by our Q3, which includes Christmas, we were seeing almost triple-digit growth in new customer acquisition. And then it all started to go wrong. So the journey that Chris talked about over decades, we experienced in basically 18 months. While new customer acquisition was doing this, our marketing spend was doing this, and our customer acquisition costs was doing this, and it was continuing on this trajectory. And the reason for this is what's already been explained. If you look at a traditional marketing funnel and the journey that people have to go through from being completely unaware of your brand to having some desire to purchase to actually taking action, bottom of funnel stuff like Google Shopping just focuses on these people, who are people who not only are aware of your brand, have some desire to purchase, are ready to purchase, and have the means to do so at this exact moment in time. That's quite a small pool of people. The bigger opportunity for us to grow was in people who weren't ready to buy yet, weren't quite convinced that we were the right brand for them, or didn't even know that we existed. What we did was simply gobble up too much share of people at this stage of the funnel, which had other intended consequences, one of which was that our wholesale business completely tanked because we'd taken too big a slice of the pie at the bottom of the funnel, which was finite. What we should have been doing was investing at the top of the funnel and making the pie bigger for everyone overall. But despite that problem and the impact it had on the wholesale business, the direct-to-consumer business grew 70% and had a great year. So I looked great. And it was all driven by new customer acquisition growth, but it wasn't sustainable and repeatable because it was smoke and mirrors. I hadn't grown customers 56%. I'd just taken customers from the wholesale channel. So what we did to resolve that was transition to a full funnel performance marketing approach. And I'm not going to bore you with a long timeline of events. I'm just going to take you through the 6 things that have made the biggest impact to our business in our journey to do this. Starting with getting the right expertise on board from day one. And there's a very good reason to start with this point, and that is that it's hard. It's hard for a number of reasons. Not least of which, it takes a long time to get payoff, or a lot longer than traditional bottom of funnel performance marketing, which pays off in days. Top of funnel and full funnel takes months and years. So people have to have confidence in the process. Which brings me on to my second point, which is patience. We had to be really patient during this process. FOSBA actually looked at this. They ran this report on their own clients, and what they found was that their clients who invested in upper funnel for 10 months or longer had a 35% lower CAC, an 11% lower cost per point, and overall a 45% higher ROAS. And this reflects what we've experienced. But conversely, when you looked at the same cohorts over just 3 months, brands investing in upper funnel had a 33% higher CAC, a 14% higher cost per point, and a 7% lower ROAS. So patience and trust in the process is absolutely key. Which brings me on to my next point, which is measurement. It is harder to measure full funnel, but it is possible. But it's very different to what most of us are used to. And I'm going to say something that's a bit controversial, and some people get their knickers in a twist about this, but it's what I've experienced personally, so I'm going to say it anyway. And that is that event-based attribution is complete and utter bullshit. Just because you can prove that somebody's seen or clicked your ad does not mean it had any impact whatsoever on their decision to purchase at that moment. It just means that they interacted with it. The simple fact is that correlation does not mean causation. It's a bit like trying to pick the note in a song that made you like it. There's loads of factors that go into convincing somebody from being completely unaware of your brand to then having a desire to consume the product. And clicking your ad had some level of contribution, but it won't be the thing, and you can't prove that, and you never could. Our measurement setup, or what we're working towards, looks like this. So our North Star is our customer metrics, because these tell us what's actually happening in our business. Regardless of what a platform says is happening, this is what's really happening to the business. And if you don't understand your customer metrics, then you don't really understand what's happening to the business. Second most important to us is experiments, because these are the only way to definitively say whether what you're doing is driving incrementality. But they're slow, and they're difficult, and they're invariably expensive. So we back this up with econometrics, which are advanced statistical models which allow us to see which parts of our marketing mix are having the greatest impact. Very difficult to understand and would need its own presentation in itself, but it's sort of like peeling back the layers of an onion to get to the core, which is your baseline revenue. So what would happen if I turned everything off? And then lastly is data-driven multi-touch attribution. It's the least important to us, but it is the easiest and the quickest, so we do use it. So measurement is a lot more difficult when you go full funnel, but it's important in pursuit of this, which is understanding incrementality. What percentage of my growth is happening because of what I'm doing, and what would happen anyway? And it's been important to us in understanding what we're doing that's actually driving growth, not just in our D2C channel, but also in our wholesale channel. And the impact of going full funnel has been really significant. Our online retailers particularly have had an absolutely bumper year, the year that we switched to full funnel. And that's absolutely not a coincidence. Something that's not to be underestimated, and this has been mentioned, is the demands on creative. We go through 46 assets a month to feed Meta and TikTok, and another 12 to feed YouTube and demand gen when that's running, which is 58 assets overall, which is a lot. But that volume and that speed and that pace has allowed us to evolve what we're doing. And we've made massive gains in performance simply by optimizing our creative to the channel and the stage of the funnel and the campaign objective. So our organic content, which is what we originally started using, looks like this. It's beautifully shot, it's pixel perfect, but it does not engage or entice new customers to purchase. It doesn't work on new eyeballs. So we've evolved to doing stuff like this, which follows paid social best practices. It's captioned, it's short, it's sharp, it's quirky, it's eye-catching. And we're now experimenting with creative formats which would have been considered completely off-brand and completely off the table a couple of years ago. But these are having phenomenal success for us. And that rapid speed of test and learn is what's driving this creative development. And that brings me on to my final key point, which is the importance of experimentation in everything. In creative, in budget allocation, in channel. Like, we haven't found a formula and then stuck to it. We've constantly evolved and constantly questioned things. And it's driven results for us. So we've had really strong growth for the last 2 years. And this year we're targeting 31%, but I think we'll do 40% again. And overall, we've grown 212% since we began our performance marketing journey. And going full funnel has meant that it's not just our direct consumer business which is seeing this growth either. We're seeing it across all channels. So that kind of rising tide raises all ships analogy from earlier, that's exactly what we're seeing, thanks to a full funnel approach. Lastly, I'll just summarize those key points again. Work with people who have successfully done this before. Be patient. You have to trust the process. You're not going to be smashing your targets in a 30 or 90-day window. It's going to take longer than that. That could happen, but you can't bank on that. Remember that event-based attribution is complete bollocks. It won't tell you what's driving incremental gains. It won't tell you which parts of your marketing mix are having the biggest impact. Creative is the single biggest lever you have to pull in improving your performance. Make sure you've got the quality and the quantity required before you put significant budget behind it. And then lastly, continually test, question everything, and regularly try new ideas. And the last thing I'll say on this is that it is hard and it does look daunting, but it's hard and daunting for your competitors as well. And the brands that adopt this will win. And I know that because I work for one of them. Thank you.